Hello, welcome to Aliasoft webinar. My name is Alejandro Delgado, Technical Director of Aliasoft, and thank you for joining us today in the third and last session of the series of webinars with the topic Prospects for the Energy Markets in Europe from 2021. As usual, our first speaker today will be Oriol Saltó, Data Analysis and Modeling Director of Aliasoft, that will discuss about the evolution of the European energy markets. Then, we have several guest speakers from ENGIE that will talk about the financing of renewable energy projects. The speakers will be Daniel Fernandez Alonso, Head of Energy Management and New Green Wholesale Business, Raúl Rodríguez Ascaso, Head of Business Development, and Ignacio Sáenz Berruga, Head of Origination and PPAs. Please use the Q&A menu to send us any questions you may have, and we will answer them after the presentations. If you want to address one speaker directly, please include his name in your question. And now, I hope you enjoy the webinar. Oriol, please share your slides.
Thank you, Alejandro. Good morning, everybody. My name is Oriol Saltó. I'm in charge of data analysis and data modeling at Aliasoft, and I'll be the first speaker today. I'll share my slides right now. Okay, so I'll basically will cover the first part of the webinar. So I'll basically show you the evolution of the energy markets in the last month, in the last weeks, and then in the second part of the webinar, we'll talk about renewable projects and PPAs and project finance. First, I'll give a few words about the company and the services that we are offering. In Aliasoft, we basically offer forecasting services for any energy market in Europe. And our forecasts go from the short term, so hours ahead, up to reports for the long term, up to 30 years ahead. So we basically forecast any variable that can be interesting for the energy sector, obviously prices and market demand, but also renewable energy, weather variables, socioeconomic indexes, fuel prices, etc. And not only daily markets, also intraday markets and ancillary services. We also make all kinds of market analysis reports. We make expert reports for court proceedings and lawsuits, analysis on the impact of market prices of new taxes or renewable actions or the influence of CO2 prices. Basically, any factor that can impact the markets and their prices. Our the methodology that we use is our own methodology. We call it Alea methodology or Alea models, and it is a hybrid model based on statistical models, combining more classical techniques like regression, econometrics, and time series analysis, combined with more advanced models like neural networks and machine learning algorithms. The three main characteristics of our methodology that we like to stress, it's that it is a methodology that is completely scientifically based. So this gives consistent forecasts that keep their coherency over time, and we have been using this methodology for more than 21 years now, starting in the Iberian market and now covering any market in the continent, in Europe. So on the evolution of the pandemic, we see how the vaccination campaign continues in all the European countries. There have been some setbacks and some delays, but basically it is going forward. We are seeing the end of this third hit of the pandemic, and basically as this third hit of the pandemic ends, we are starting to see a more clear future in terms of the economic crisis. So I will go now through fuel prices and CO2 emission rights. I always like to start with this historical perspective of the Brent oil price. So this is this blue dot is the year-to-date price for 2021. So after being the 2020 the lowest price from the last 15 years, prices are recovering quite fast. So we are already in the average year, annual average. We are already close to $60 per barrel. Making a zoom on the last month and last weeks, we have seen how the prices have recovered since the lowest prices in May or April of 2020, in the deepest part of this crisis, and right now they are already over $60 per barrel. So recovering very fast and reaching the levels previous to the crisis. Afterwards, we will see a daily the daily prices. These are just the weekly averages. For gas prices, we are seeing more or less a similar behavior after the lowest prices in in April and May. Prices recovered quite fast. They in January they reached their maximum above 20 euros. 20 euros per megawatt, and since then their upward trend has been reduced a little bit, but still quite high prices compared to what we had just a few months ago. CO2 prices, they are right now at historical high prices. They have reached this is the price of last week. I will show you now the prices for this week, and they have already reached the 40 euros per ton. So this is a historical high price, and we are seeing that basically the upward trend, even this sudden drop during the pandemic, the historical trend since since the last year is clearly an upwards trend. And now looking, well, I obviously don't have time to go through all the markets and in all the countries, but let me just show you in the Alea platform, a service that we are offering to our clients, how we can see. Let's see here this. How here we can see how has been the evolution. I will show you the fuels. Okay. So this is these are the gas prices, and as we can see, since the end of January they are retreating a little bit, but if we show them since January, we see how we reached the highest price in mid January, and looking into a little more perspective, since the highest prices that we had in 2018, for instance, we see, despite this price spike, using the monthly average, we see how we are already reaching levels before 2019, so 2 years ago. Also, I said how the Brent prices were growing really fast. Yesterday, they surpassed $64 per megawatt, and as I said, this is quite a long height. I think from let's see, from 2017. So we are already at levels of the beginning of the year, so pre-crisis levels. So and growing really fast. CO2 prices, I also said they reached 40 euros per ton, and this is a historical level. So we can go back and show the history from I don't know, maybe 2010. And see how this is a really historical high price. So going back to my slides, but also you could also see all the variables for all the electricity markets in the European countries. So I'll go back now to my slides if I can find them. Where are they? Okay, here. Okay, so as I said, I will not have time to go over all the markets. Also in our website, you can see all the market reports that we are offering, covering all the markets in Europe. So this is just a summary view. This is the year-on-year change of electricity demand in every country for every month since January 2020 until last month, January 2021. So basically, we see that how since the end of last year, all markets have recovered the previous levels on electricity demand. Some large variations in some countries that are more sensitive to weather conditions, like France and UK. These are countries very sensible to the weather. So we have seen, depending on how the weather conditions were compared to last year, we see more important changes in the electricity demand. But basically, in all the countries, the electricity levels were already recovered by the end of 2020. Making the same comparison, but with electricity prices. Here we can see how in all the markets, prices in December last year and January this year were already very high compared to prices in January 2020 that were already quite low, not yet as low as they were the lowest levels that were reached during April and May, and even in some countries like in the UK, you can see how the price has even doubled compared to last January. So basically, in January we lived, as we saw, gas prices were very high, CO2 prices were very high, oil prices were very high also, and on top of that, we had the Filomena storm. So basically a cold snap that brought the electricity demand and the energy prices very, very high. Looking at the detail of the daily prices for this market since the January 1st, basically you can see it's a little misleading, this graph, because we have these very huge spikes, price spikes in UK. So basically all the other countries look like very low prices, but for instance, the prices in Spain, this value close to 95 euros per megawatt hour was the historical high on daily average. So in all the countries, very, very high prices. But as we mentioned in the last webinar, that was basically in the middle of this high prices episode, this was just a temporary situation due to the combination of all these factors that I mentioned. So by the end of January, already in Spain, we were reaching prices very close to zero. And since then, combination of low demand, warmer temperatures, a lot of wind in Spain has led to these very low prices in Spain, and also lower prices in the other markets. Looking now at the forward curves for the commodities and the power markets, in the Brent oil futures, we see that as the spot price is going up quite really fast, future prices are also quite high right now, above $60 per barrel, and at the long term equilibrium is raised a little bit since last time, so now it's clearly above the 50 euros per megawatt. It used to be around $45. Now it's above 50. In the futures for the gas, since last time, that the last webinar was in mid-January, they were just when the gas prices were really high, so futures were also above 20 euros per megawatt. I think they even reached 25 euros per megawatt. Right now, as gas prices are retreating a little bit, also the futures prices are also lowering, and at the long term, the equilibrium price is more or less at the same level that it was, around 15 euros per megawatt hour. The power prices, Spain futures are clearly below the rest of the markets. This is also it's also influenced by the spot prices that Spain is having right now, really much lower than the other countries. So futures at the long term even went below 40 euros per megawatt hour, but probably when spot prices recover a little bit, this forward curve will go a little bit above 40 euros. And looking a little more into the future, basically, I'm already finishing. Basically, what we have seen is how this episode of high electricity prices that we had during the first half of January, it's basically over. As we said in the last webinar, it was a temporary situation due to the combination of cold weather, high gas prices, high CO2 prices. But basically, when these conditions were over, we reached back to our normal levels. Well, normal levels, let's say the normal variation in electricity prices right now in Spain, with warmer temperatures, less demand, and a lot of wind. We are having really low prices in electricity. The rest of the markets, oil, gas, as we have seen, basically all the prices have recovered from the COVID crisis. CO2 prices, especially, we are seeing historical heights. It is a very volatile market, and in the future we will keep seeing this volatile behavior. But basically, the general trend will be upwards. This is expected in the long term. And in the midterm, right now, what we were seeing during the last webinar in mid-January, we were seeing kind of a lot of uncertainty, not clear. As we are overcoming this third hit of the pandemic, the midterm is right now a little bit more clear and less uncertain. So we are seeing the path to the recovery of the economic crisis and the behavior of the energy markets. Looking at the long term, what we have seen is how the results of the renewable action that was held in Spain in the last part of January, we didn't see crazy low prices as a result of this auction. This we think is an important good news for the energy sector, as we are seeing that the sector is not the sector has a long-term view, and it is bidding for prices looking at the long-term viability of the projects. The financing of renewable energy projects continues to be very active in the continent. We saw a little bit of delay, a little bit of obviously during the worst part of the pandemic, but the financing of the projects was kept going, and right now it is still very active. And at the long term, prices are looking stable, obviously with the intrinsic variability of the market, but the equilibrium prices at the long term, it's stable as it was before the crisis. And just a reminder how long-term hourly price forecasting is an essential input for financials models in order to estimate the returns, to estimate the revenues of all the long-term projects. So just some final remarks of some important things that I said. High market prices that we saw at the beginning of the year that were kind of there were all over the news due to it's kind of people was kind of scared of if this could be what we were seeing in the future. As we mentioned, this was a temporary situation. Now it's completely over. We are back to the usual behavior of the energy and the electricity prices, but CO2 prices are really high, and they will keep climbing with their intrinsic variability. The midterm is looking now much more clear, as we are seeing the third hit of the pandemic already ending. Long-term forecasts are reliable, so the financing and the investments in renewable energy projects are, let's say, they are safe. And the European energy sector continues to show signs of strength, stability, and let's say looking for a great future. And just I'll end already inviting you to our next webinar. It will be just 1 month from now, so March 18th. In that case, we will have invited panelists from Ernst & Young, and we will be again talking about how the energy markets are evolving in Europe, and how the financing of the energy models go, PPAs, etc., etc. So thank you, Alejandro.
Thank you very much, Uriol. Now, thank you, Daniel, Raúl, and Ignacio for joining us. Daniel, when you're ready, please, you can share your slides.
Good morning, all. Thank you, Alejandro, for the slot. Well, first of all, thank you very much to ALEA for organizing this kind of webinars. That they are very appreciated for sure in ENGIE, but for many players and agents in the sector, because this is a way to deliver more market, better market, creating market altogether in a very, let's say, I would say a challenging environment, but also brilliant environment for the sector and for renewables. So thank you very much for counting on us and for inviting ENGIE to participate in this webinar. I'd like first to introduce you our company, and I think what it makes sense is better than bigger slides. We can share with you this video. Let's see it.
You can count on us. Faced with the exceptional crisis that is unfolding worldwide, you can count on us. You can count on us to apply the rules to protect the health of our employees and their families, working from home, limiting travel, and keeping teams in the field only when absolutely necessary. That is how we're also protecting others. You can also count on us, the 170,000 ENGIE employees worldwide, to supply 24/7 the gas, electricity, and services that people need for heating, for lighting, for working, quite simply, for living. And you can count on us to continue to provide the services required for the proper functioning of buildings and essential infrastructures, in particular health facilities, the food industry, transport, IT, and telecommunications networks. You, our employees, our customers, our partners, our shareholders, you can count on our solidarity with those most in need and our determination to act wherever we can, however we can, to overcome this crisis. You can count on us.
So, well, that's it. ENGIE, at the end of the day, is an utility. You can count on it. You can count on us to keep on building together a very brilliant future for the energy worldwide. Thank you very much for the timing. I'm Daniel Fernandez. I am responsible for wholesale energy markets in Spain and for new green development business in our energy management team for GEMA Iberia. It's a privilege for me to share this timing with you. The key speakers today from ENGIE are not myself, but I think maybe some of you have shared with me too many webinars. So I'm delighted to be here with my colleagues, Raúl Rodríguez, the head of business development, and Ignacio Sanz, the head of origination and PPAs. The idea of this session is to share with you how ENGIE in Spain see the recovery, the green recovery, and how do we see PPAs upstream and downstream as a key enabler for this energy transition and for this green recovery. Raúl is going to discuss and go in deep with the upstream PPA usefulness and the differences between the auction PPA and the classical private PPA. And Ignacio is going to share with us why PPAs are important in order to hedge downstream, why the corporate PPA is also a unique opportunity for consumers. Here a disclaimer, we are just sharing some market info, but we are not giving any investment advice. So this is the agenda we have for today, ENGIE at a glance. Some reminder on PPAs, what, why, how, and then the key speeches today, which are the one from Raúl on PPA auctions and PPA contracts, and Ignacio on why there is a brilliant opportunity now for corporate consumers to implement PPAs. We have seen something about ENGIE. ENGIE would say we are a utility, but we base our business in two golden triangles. One is that we give gas, power, and energy services all together, and we are experts in combining everything worldwide, as you can see in the figures here. And we have a second golden triangle, which is our business is about people, profit, and planet. We are not a kind of the diplodocus utility, you know, in this kind of very old-fashioned, very focused on. Well, we have an approach which is taking care of people, taking care of planet. It should lead us to sustainable profit. This is why you can count on us, as we saw in the video. And honestly, the best energy is energy which is not consumed. So we want to be your partner, your architect on energy solutions. The less energy consumed, the better for everyone. In Spain, we are delivering all these services in 13 offices, more than 2,000 people. We have some gas power stations, hydro power stations. We have wind, we have solar. We are giving market access. We are traders, we are retailers. We have a bit of everything, say 3 to 4% of the Iberian market. We are expanding our activities to Portugal. We are onboarding in the portfolio 1.6 giga of hydro, round river and hydro in basins that ENGIE, together with VNV, BNP Paribas, and Mirova purchased last year, Natixis. And well, we are growing. In the last 3 years, we have done more than 1,000 mega of wind and solar PPAs. We have done almost 1 giga year during 11 years of downstream and midstream PPAs. So, well, we are very active in this business in many different channels, and we can give you the energy solution you may need. Indeed, we are believers of a model, integrated model in which the utility, very dynamic, very fresh, can design, build, operate, maintain, finance any kind of energy solution for you. The best example we have today in Spain, maybe the Goya project, 9 wind farms in the Aragon region, in which we are equitors. We have given a PPA for that SPVs to enable the financing. We are giving market access services. We are giving hedging services. We have built part of the EPC, part of the engineering, and part of civil works of that assets. So, you know, the more sophisticated the energy solution you need, the more value ENGIE can give. Having said this, we can also give services in any part of this model. PPAs, well, some key reminders. Why? They are a tool to eliminate volatility. You can see there, Cal22 quote yesterday closing. The forwards have volatility. One seller of energy 1 year ago were selling power maybe at 45 euro megawatt hour for 2022. Now it is a bit high. It is close to 49. So the PPAs are enablers to fix the price, put that horizontal line, forget of that volatility, and guarantee the level of turnover for a developer, or guarantee the sourcing price for a corporate consumer. So It is a risk management tool. It is we in ENGIE see the PPA as something which opens the door to deliver much more services. I have told you that the PPA itself is an enabler. It's a tool that gets rid of market risk or switch market risk outside of the developer, outside of the consumer. As Warren Buffett reminds, the PPA, the first rule is when dealing with these energy management things, the first rule is not to lose, and the second rule is not to lose the first, not to forget the first rule. So, and this is not rocket science. This is about hard work, which is what we do at ENGIE in Spain. In order to get info, what can be the level of prices of the PPA? For sure, models, long-term models, they give us a very good insight. In this case, Alea really masters this in order to give a very educated and scientific view on where the future can be. That future, it is impacted by many things. Regulation, in the case of Spain, PENIEC, National Energy Plan, penetration of renewables. You can see there the summary and the government targets. Obviously, evolution of the commodities, info, targets, strategy from the companies. Today, as you know, in Spain, the ambition is to commission maybe double the energy, the capacity we have here in the PENIEC, according to the energy, to the installations that have been granted capacity in the network. Let's see. So let's say that the price in the future, it's a mix of many things. For sure, models play a key role. As I mentioned, you can see there some reference from Alea that what was forecasted in 2009 in 2009 for the next 10 years, and it has been quite successful forecast, Antonio and Alejandro. No? So this is part of the game, and then we have the organized markets. The organized markets are defining a mid-term curve, which is a reference, which speaks a reference, that you know, in Spain, the liquidity is very tiny, very low. So this is just a reference, but basically prices are quite synthetic. You see that after year 3, year 4, there is no liquidity. Indeed, some market operators, MEF, they put the same backwardation in the long tail. So where should be a price of PPA baseload? It should be this as a reference, but each trading house has its curve. So therefore the price might change. And then this is the mid-market. Obviously, for a PPA, it is a risk management tool. There should be utilities have to be paid for that. Then you have to put guarantees. You have to articulate complex contracts. Regulation or market design may evolve. So all that has to be priced. So if we see the average price in OMIP at, let's say, I don't know, 41 euro megawatt hour, what can be a price of a PPA baseload in 10 years in this tenor, 22, 31? Maybe, I don't know, 37 euro megawatt hour, 38. It depends on the risk premiums, the margins, and the appetite the off-taker has. Same issue the other way around when the off-taker sells to a final consumer. It is hardly, from our orthodox viewpoint, expecting a big discount on the mid-curve. It is at least not orthodox. So with all this, you can get a flavor on what a PPA baseload may be. If you multiply this average times the expected solar shape, apuntamiento, solar shape factor, 0.8 in average 10 years, 0.9, 0.7, no one knows. Models are key for that as well. You can get the PPA as produced. Raúl and Ignacio will debrief more on it. PPAs, they can give, we are trading typically fixed price baseload or shape. In the case of ENGIE for solar, some agents are giving shape for wind, okay? It's true that the shape risk is lower in wind than in solar, but it is not our case. And then they can be physical or financial, depending on the ambition of the off-takers, the ambition of the lenders, the ambition of the sponsors, etc. When negotiating a PPA, we have to take into account that this is not bilateral. Typically for upstreamers, we have banks, we have lawyers, we have consultants, we have models. So, you know, negotiating a PPA, it's a kind of co-construction, co-designing, in which we really need robust partners, reliable partners, and we need a lot of empathy and a lot of co-construction. My tip on this is find good partners. ENGIE is one very reliable, as many others, as you can see in this chart. It's a matter of reputation, as Warren reminds us. Finally, it is not only about price. You see one index page of one of our upstream contracts. There are many things to negotiate. Guarantees are key. Credit quality is key. Robustness of the contract in case there is a problem in the regulation, etc., is key as well. So take that into account. And that's it on my side. Now I leave the floor to my fellow colleague Raul, which is going to explain us upstream key points for PPAs and the deltas between the auction prices and the classical PPAs. Raul, thank you. The floor is yours. I stop sharing my screen.
Hello. I should be. Hold on a second. Okay. Now. I hope you can see my screen.
Very good, Raul. Go ahead.
Okay.
It's perfect.
Hello, everybody. I will try to provide now the ENGIE's view from the development and investment side. So try to explain what mechanisms we can find to mitigate at least partially the merchant risk of the projects that where we are trying to invest. Basically focusing on two, as Daniel introduced before. So PPAs and also the auctions that the government is organizing nowadays from this year on in Spain. First of all, continuing, hold on a second. Going ahead on what Daniel explained before about PPAs, it's important to know how complex is negotiating a PPA in a renewable project. So we need to find the right balance between the interest of very different parties that are involved in the negotiation. There are mainly three. There is the developer, at the end is trying to secure the project. For that, they need to cover or partially their flows and to anticipate as much as possible the IRR that they will be obtaining for the project. And of course, they need to make the project bankable. Okay, so that's something really necessary to invest in renewables. Then there are the lenders. Lenders are looking for, at the end, trying to secure the recovery of their debts. No? For that, they need credit risk, guarantees, and a robust PPA, a robust contract that cannot be breached easily. No? And in front of both developers and lenders, there are off-taker. Okay, so the off-taker at the end is providing price, is providing some references for the project, is providing credit, warranties, relevant warranties, and in exchange is taking a product to be sold to end customer in the long term, green energy, or trade with it, or just providing services as guarantees of origin, hedging, and so on. The three parties have different interests, different timings, and it's a real challenge to align everything to be able to sign contracts. Now, if we focus on the development side, at the end, what do we want to do as investors? We want to mitigate the volatility on revenues. Okay, what are revenues coming from? So they are at the end the result of multiplying production and prices. No? So production we can handle to some extent by a good design, by good contracts, warranties, a good strategy on R&M and so on. But prices, I mean, we have a liquid horizon, as Daniel said, not very liquid, but 2, 3, 4 years, whatever. And then we have models that can provide in a view, but we have to take a risk. You know? So if we want to have some visibility on how our incomes will be evolving, we need to find tools. What tools can we find? At the end, we can use different ones. Okay, I think today we will focus especially on the public auction organized by the government. We can choose a PPA. We can do nothing. We could do just stay and keep 100% of the merchant risk and wait and see what's happening. There are some players that are able to do so, or we can find other solutions as subsidies, hybridization, which can be a new interesting tool to, let's say, secure or reduce the risk on profiling, for example, or on cannibalization of PV. At the end of the day, we need to combine probably different mechanisms, but it's quite relevant to know that they are not always necessarily comparable. Okay, we need to understand the product and to see how we can price them and we can include them and consider them in our business models. Now I will try to explain our view on the difference between the two main products we have today, as said, PPAs and auction. For that, let me introduce the main features of the auction organized by the government. Maybe it's already something known by most of you, but I think it's important to introduce it, okay, to compare it with a PPA. It is pay-as-bid auction, that meaning that the awarded players will be receiving the price they offer, okay? So there will be a wide range of prices you will see in the next slide. Then the prices are an as produced, so you are covering not only the base price level, but also the profiling risk, let's say the market factor risk, the received price that you are expecting for your plant. There is a relevant point, which is that you are covering up to 12 years, okay, on your supply. So the government is ensuring you a price for 12 years, up to 12 years, but with some or a huge flexibility, I would say. You can leave the mechanism whenever you want by paying €5 per megawatt hour, but even you can leave it for free as soon as you have achieved a minimum volume during the life of the asset. It is calculated as 1,500 hours multiplied by 12. So this is the minimum commitment you have with the government. As from that moment on, you can leave the mechanism if the prices are higher. Okay, so in a standard plant of around 2,000 hours, that means that you could be deciding to stay or leaving the mechanism for free at year 8, year 9. This is important. Also relevant to know the start of deliveries to the government, or formally to the auction, is Q4 2023. So if you have a plant that is almost ready to build today, and you can commission it before the end of this year or beginning next year, you will have more than 1 year before the mechanism is starting to apply. So you can hedge, make a very short-term hedge in the liquid market at high prices, at current prices, for more than 1 year. So this is increasing your profitability, is increasing your competitiveness when placing a price in the auction. On top of there is a product that is basically fixed price, but there are 5% linked to the market. So, and a small part which is merchant. You need to place guarantees with relevant development milestones to be fulfilled. But as from COD, you don't need you recover your guarantees, and you don't need to put a guarantee anymore. And also, you are avoiding, to some extent, a complex negotiation, as I was saying before. No? Now, let me show you the outcome of the auction. You will see in the graph two things. Already in the bottom part, you will see the volumes. Okay, the volumes awarded by the different players, and then on the higher side of the graph, you can find the prices aligned with the range of the different blocks offered and awarded by the different actors, and also a dot with the weighted average price. You will see that there is a wide range of prices. It's incredible, from 15 to 29. Okay, it's important to say that this range is depending on many factors. For example, what are the projections that the players are using after the auction? Okay, so the auction is 12 years. You are investing during 30, 25, 30, or 35 years. So after the auction, you need to consider a price. The price you are using is impacting on the price you are placing in the auction. Also, the specificities to each project. You have more hours, you can be more competitive. You have less capex, you can be more competitive. And also what you are asking as a profitability for the project. Not all the players are requesting the same profitability. This is already something relevant. Also, the fact that this is the first auction in Spain for a long time. Many people waiting for that. Also, the first one ever of this kind. The previous one was quite different. So this also could explain part of the wide range we are observing. But at the end, in spite of this wide range, there is a weighted average price around 24.5, 25. And we need to say that according to our view, it could be a good reference. If you see that price, there are relevant actors and relevant volumes around that level, 24, 25. And maybe in the next auctions, this range will be less more narrow, okay, and we have some reference. Then if we consider, let's say, a reference of 24.5, we compare with a PPA, considering a standard PPA, a 10 years PPA starting from COD onwards, okay, with, let's say, as produced, so considering the profiling and considering all those things, 10 years, 80% of the production of the power plant. I mean, difficult to say a price. I mean, I will put a reference. Let's say it should be something around 30. Daniel was saying 40 or 37 in base, plus some risk bricks. If you consider also the profiling, so the market factor, maybe something around 30, okay, in that level. So a very different price compared to this 24, 25. Why that gap? According to our view, I think I explained before already, if you are ready to build, you will be able to hedge 1 plus 12 years, which is quite good for depth sizing. Instead of 10, you have even 13 years, okay, in the best of the cases. So you can reach good conditions in your financing. Then you have a huge flexibility. Maybe from year 8, 9, you can leave the auction. If your price projection are above the price you are putting you are placing in the auction, then you could consider including in your equity case that price and leaving the auction in the year 8, 9, and then make a short-term or medium-term hedge from that moment on. So this is improving significantly your profitability and your competitiveness. And then there are other things important to say. Yeah, I mean, there are a part which is merchant and many other things, but important. According to our view, the products are quite different. That's the explanation on prices. On top of the wide range, if you look at the weighted average, this is a reasonable level according to our view, but you cannot compare with a product which is different, okay? Just to finalize, an example of why we say that combining different mechanisms and that diversification is a good approach according to our understanding. We, for example, went to last auction. We were awarded with 85 megawatts at a price quite similar to the weighted average price of the whole auction. We went to the auction 3 years ago, and at the same time, we are quite active, or our colleagues, Daniel, Nacho, and all the team is quite active developing the PPA market. So we are convinced that combining, diversifying is a good approach. So thanks a lot for your time. I leave the floor to Nacho.
Okay, thank you, Raul. Hi, good morning, everybody. Let's see if I'm able to share my screen with you guys. Here it is, I guess. Am I sharing properly?
Yes, Nacho, you have just to switch to the slideshow mode.
Yeah, I'm on my way.
Perfect. Thank you. Go ahead.
So that's it then. So thank you guys for having me here. It's my pleasure to be here this morning. Thank you to Alea Soft to let us to express our opinion regarding to this such a trending topic of PPA's market. My idea would be mainly to share you these slides and provide you some brief ideas. Yeah, so we will be more than happy on having nice discussions with you guys during the question and answers period. So, but that's it more or less. Yeah, the idea I would try to show you some slides and try to explain just little it was it and which are the main ideas. So let me say that I'm going to be the party pooper of this webinar, because at the end of the day, some of you guys and some people here in Spain are having such a nice discussions about the auction, the outcome of the auction that, as we already know, provided us an average price of 25, something like that, on PV power plants. So I will try to poop the party, yeah, trying to explain you why it's not so easy to have an off-taking PPA in those figures. Which are the factors that plays in a PPA, which are the factors that play in a PPA for an off-taker. So those will be more or less main ideas. Regarding to ENGIE as a company, yeah, so we are involved in the whole part of the value chain. If we look at the PPAs, we are involved from the upstream up to the downstream by providing services mainly, as we are developers. As Raul explained, we are also involved in the upstream part as developers and sun energy producers. We have got a very nice energy management company that manages all those risks, all those market factors. And in the end, we are very, very well connected with the downstream part of the business, so we can provide very nice products to our customers. Okay. So if we look at the PPAs, we have such a very nice chances to do PPAs with different technologies. Now, these days in Spain, most recent ones are based on solar power plants, wind power plants. We're trying to discuss something about biomass, and also to provide products on long term with gas. But up to date, only power PPAs are available here in Spain, and mainly with those two technologies, with that are solar and wind farms. Why to choose a PPA off taker or a partner like ENGIE? Well, it's about track record. We are to this moment having contracts like 300 gigs per year, like 10-12 contracts. We have got this kind of contracts with another midstreamers when we're acting as a developers, but also with downstreamers. The good part of the thing of working with ENGIE is the guarantees that the ENGIE can provide. That is an investment grade company. And at the end of the day, as discussed, as commented by Raul, but also with Daniel, there is a nice golden triangle here about developers, off-takers, and financial institutions. So at the end of the day, it's mandatory that these three parties reach an agreement on this PPA contract. So at the end of the day, this is one of the first things that, let me say, is not going to let a good number of off-takers to have products like the auction one, yeah? Because at the end of the day, what the auction provides to developers is some kind of guarantees that could make the projects be bankable. So bank conditions for create a PPA bankable are the guarantees, and more or less banks placing numbers of guarantees about the 30%, the 40% of the senior debt of a project. Yeah. So that means that if we are talking about projects of 100 megs with an investment cost, rough numbers, this is not the correct numbers, yeah, but this €0.5 for sure is much more higher. We're talking about 100 megs PV power plant, 50 millions, leverage 70%, 35 millions. So at the end of the day, to have a 200 gigas contract, you have to provide a guarantees higher than 6-7 millions if you are talking to a bank on first demand. So not that much number of off-takers are willing to provide those kind of guarantees. So let me say that this slide is named something like "Do not try to align the stars." So having a PPA upstream, downstream at the same moment is more or less impossible. Yeah. So normally a PPA contract period takes place in more or less 1 year from the very early begin contacts between parties up to the PPA signature. More or less, there is a 1 year time to market process. There is a lot of negotiations in between of those. It's a long and winding road. So we have got the first contract, NDA signatures, term sheet when we start to express commercial conditions with price, tenor, guarantees. On the top of that, we go to a contract negotiation phase, and on the top of that, we go to a contract signature with banks involved and counterparties involved. Yeah. So we'll try to explain is if somebody needs to place their project in a very clear COD because the development stage finished in a COD and needs to go to financial process on a clear date, it's going to be very, very complicated to find an off-taker that provides that is willing to off-take that energy at the same period of time. Yeah. Auction, as Raul commented, so maybe I'm wrong, but more or less auction products would start in 2024. I don't know how many companies are willing to start to transact in 2024. Normally, people is willing to transact in 21, the second part of the 21, and maybe first part of the 22. Yes. So at the end of the day, there's a mismatch on dates where people can find a common room of agreement with the COD of the project and the starting of the offtake. So the third idea we would like to share with you guys, that the most speculative thing that you can do in the power market is to do nothing. So if you do nothing, you are being the most speculative guy in the market, yeah, because you are so exposed as an off-taker, I mean, so as a corporate, you are so exposed to the market volatility. So at the end of the day, you cannot manage any single price that in the market is marking. Yeah. So at the end of the day, you are exposed to what market we can do. There is people that goes to the market to try to approach to these hedge markets to beat the market. Yeah. The outcome of trying to beat the markets, we will always the same. The market is some kind of a diplodocus, and the diplodocus is going to crash you 100% of the times. So if you go, if you approach yourself to the market trying to beat the market, trying to get the best prices, trying to be the most smartest guy of the room, for sure the market is going to crash you. The idea here will be to be very, very consistent. Try to reduce the volatility, the risk, step by step, trying to change money for risk depending on the appetite of the risk that your company is willing to have. Yeah. So, for instance, I say, if your appetite for risk is the highest, get indexed to the market. That's it, and you don't really mind what's going to do the market. If it's go on down, you have got some perspectives there. That let me say that these perspectives will be only used by traders. So let traders do trading work. Let's do corporates do corporate work. So for us to be indexed in a market situation where you don't know what's going to happen. Let's go, for instance, to the COVID situation. Yeah, nobody expected a COVID situation 1 year ago. So if you were indexed in this scenario of prices, super good for you guys. Because the price went down, but in 2 weeks the price went up. Yeah, so you are exposed to a very, very high volatility that is not good for you and do not pace for your final destination of your corporate works. Yeah? So the first kind of risk reduction would be a swap. As you know, a swap is a 24 hours product, some kind of a brick that do not match exactly with the production of your facilities, or the consumption, sorry, of your facilities. So you have got some mismatching there, some risk of intermittency between the base load and between your profile of consumption. So it's a nice hedge, but do not ensure you 100% risk reduction. So the second one would be to go to a profile product based on your consumption that is covering short periods of time. And the third option would be to go for a PPA. Yeah, to go for a PPA has got, as everything in your life, has got pros and cons. The good part of the thing of having a PPA is that you know exactly which is going to be the price of your energy in a long-term basis. So if you are willing to stay in the market for a long time, it's good you to have that part of your cost very well fixed. So that's a good part of the thing. Another good part is that since you're willing to transact in long-term basis, and today the curve goes in contango, so that we're expecting lower and lower prices as the time goes by. The thing is that you are capturing that long-term curve, so you are capturing very nice pricing. So you will be benefit today for the average price of a 10 years curve. For instance, today you're having a price in the market around 40s, and you make a long-term PPA starting in 22, you can have prices around 30s. So you are having a discount today of 10 euros. Yeah. So the good part of the thing is that you are having some savings today. For sure, by the end of the curve, those savings will convert in losses. But at the end of the day, the main idea here is not to approach to a PPA that I'm saving money, I'm losing money. The idea always here is to reduce risk. So what we want to explain you guys is that to approach the market being a winner to the market or being a loser to the market is a wrong approach. The approach to the market is I'm reducing this risk. I have this number of risks, so I decide how many of those risks I want to reduce. I want to reduce the price, I want to reduce my shape, I want to reduce my exposure, I want to reduce the number of points that I'm going to have in a near future, or if my business is going to grow. This is the kind of risk that from a corporate point of view should be analyzed, and according to the decision we have got there, we will take the proper decisions, okay? Normally, the good part of the thing, and today, another idea here would be to create an industry, yeah? So this goes directly linked with this diapo and the next one. Today, off-takers, developers are willing to have a very nice price based on their curve, and off-takers are willing to have a very nice price based on the consumption, yeah? So for instance, Raúl is willing to develop a facility of 50 megs that produce, rough numbers, ballpark, 100 gigas per year, yeah? And an off-taker is willing to buy 100 gigas per year, yeah? But the point is, the guys do not align in the time of the COD, the time of the consumption. First problem. Second problem, Raúl, the facility of Raúl, by the 1st of July, is going to provide 50 megs base load on a given hour. That for sure, that base load power is going to be higher than the maximum consume of a given hour of an off-taker. Yeah, so an off-taker that is consuming 100 gigas in a PPA or 100 gigas in a year, for sure the maximum power that he's consuming is going to be around 20 megs, 50 megs, something like that. So Raúl is going to give you in a given hour 50 megs. Yeah, so there is a mismatch there that somebody needs to assume. Yeah, so we want to transact to explain here to you guys is off-takers up to this moment is very, very important to be mid-streamers or people that can edge themselves in the markets, because they can assume this difference in balancing, this difference in the risk, this unbalancing cost from not producing, not consuming. So you are losing in the meantime a difference in pricing between those 25 that Raúl talked in the auction and which is the price that you are going to transact. So this is the part of the party pooper, yeah? So if you want to buy at 25, you have to buy directly to Raúl, providing him guarantees to be bankable, to assume that you're going to take the whole energy that is coming from Raúl whenever it comes and in the volume it comes on a given hour, yeah? And it's going to be in a tenor that maybe do not works for you, because Raúl is needing to have those 12 years or maybe to jump out from the contract on the 8th number year, on the year number 8, yeah? So all these things makes very, very complicated that you guys could buy at those 25. And again, the average price of the auction was 25, yeah? But the highest price of the auction was 28, 29. So it means that there were not much more people willing to sell at 25. So the first thing you have to do is to find a guy that is willing to sell at 25. Yeah? But I don't know if it's possible, but for sure, the guys that went to the auction, there were no more people willing to sell on 25. Maybe with the outcome of the auction, people now is willing to do that. Yeah. But first thing, you have to find that guy. Second thing, you have to do your financials crystal clear, because you are going to do a project finance there that maybe you have to put in your balance sheet because you are buying the 100% of the output of that facility. 3, you have to manage the energy in the market, because a lot of times you are going to be short in energy, and a lot of times during the summertime you are going to be long. And also you have to assume that the COD of the facility and the financial close, it's at the time where the development stage is, not at the time that you're needing to start with the PPA of take. Yeah? The good part of the thing, that's what I was trying to say, that to create industry. Yeah. So to create industry means that the off-takers as a consumers needs to reduce that gap, but by working, by being more efficient, by improving through the learning curve, and to be much more specialized budgets in energy if they want to be green or they want to assume those prices. Normally, there are two people that is approaching to the market of the PPAs, people that is price seekers, that at the end of the day, they are hitting at 25 and they want that 25 and that's it. And another people that is want to be green. Yeah. So those big corporates like Amazon, Google, or that stuff, yeah, that for them is really important to be greens. They are really committed with the with the planet and to provide to our next generations a better place to live. Yeah. Now it's a good moment here in Spain for sure, because there is a lot of people trying to develop. There is much more offer of projects that people that is willing to uptake. So that, from a customer point of view, makes a strength situation when they can be some cherry picker with the projects that they will to onboard. And the last thing is that that risk reduction in this COVID situation, these times of constraint in the consumer, maybe would be a good idea to reduce the risk that we are already facing during these months. So more or less that's from my side. Thank you, guys. I don't know if you are having the floor again, Daniel, or...
Yeah, thank you very much, Nacho. Brilliant exposure. And Alejandro, that's all on our side from Engie. There are basically in the slide sets that are going to be shared later, I guess, by Alea. You have some conclusions which are basically the same message we have conveyed, opportunities for everyone, and keep clear that there is a difference between upstream, downstream, prices on one side, prices on the other, and the role of each one. In Engie, as you have seen, Raúl, Ignacio, myself, we have a lot of energy, we have a lot of passion on this. Thank you very much. We have here our email addresses, some websites in which there is more info. There was one question in the chat. We have answered it online to all of you. Thank you very much, Ricardo, for the question. And we are at your service. You can count on us. Thank you.
Thank you very much, Daniel, Raúl, and Ignacio, that was a great presentation. And we will start now the Q&A section of this webinar, but we will answer only a couple of questions due to time constraints. We are already past the limit. So I believe Uriol already has a question. Uriol?
Yes, thank you. I'll be quite fast. The question is, how are you seeing CO2 prices in the future? Yes, CO2 prices, as I said, right now are at high records. So basically, and as I also said, the upwards trend that we are seeing right now is what we are seeing at the long term. So this is basically because, well, CO2 prices are volatile, so we will see variability also in the future, but basically the long-term trend will be clearly upwards. This is because these CO2 allowances are designed as a tool for the energy transition. So they are needed for the coal to gas switch, as we have already seen, and in the future from gas to hydrogen or has to more other renewable energies. So basically, as they are designed to be a tool for this energy transition, the long-term trend for the prices are clearly upwards.
Yeah.
Thank you, Uriol. Yeah, Danny, I believe.
No, I agree with Uriol. In all our scenarios from many years ago, there is always a bullish trend on CO2 in the long run. The point is either the slope is very high or very low. But well, you know, it is a very synthetic commodity nowadays, very driven by regulation, very driven by expectations. So, you know, I think it will remain quite unpredictable. What we are seeing these days of CO2 at 40 euro megawatt hour is well, 40 euro ton is quite amazing. But the market is very answering to very, let's say, not commodities fundamentals, but regulatory fundamentals, expectations of green world, etc. So, but for sure, the view is really, really bullish.
Thank you, Daniel. And you can continue with the question you have already selected.
Oh, well, I have answered in the chat just for the sake of time. Thank you, Ricardo. Indeed, the point is that the organized market liquidity is there till 2023, 2024. And this is the role of the off-taker. And this is the added value of the off-taker that we have to take into consideration, that we, the trading companies, the retailers, the entities that, as Ignacio was saying, make the link between upstream and downstream, we are really the ones creating that liquidity because we are just managing that risk. We are, from an off-taker, it is the golden triangle that Ignacio was wisely explaining, and Raúl as well. We have off-taker in between developers and downstreamers, and we are the ones remaining long when we are buying a lot of energy, and then we go to find those corporate consumers to reduce our long position. And, you know, managing that risk is, well, it's something which is very technical, but also it requires a lot of tools technical tools, analytical tools, a lot of professionalism, and this is why there is clearly an added value for companies like Engie located in this value chain. And the liquidity is not in the organized market. Liquidity is in the risk mandates that we have in the trading houses and in the companies, same as liquidities in the lenders, in the banks to finance 12 years, 15 years. It's the same, managing risk, and then for sure limited. Indeed, our view is that we need now really the corporate world, the corporate demand to come to buy that product that Ignacio was wisely explained in order to be able to keep on feeding that magic triangle and onboarding more upstream and so on and so on.
Okay, perfect. Thank you, Danny. And we will answer the remaining questions directly by email. Thank you again, Uriol, Daniel, Raúl, and Ignacio for your presentations and the audience for joining. Have a nice day.